Hi everyone, Nicholas Buffett is here from sunny Cyprus, and welcome to today's tutorial where we're continuing with the theory chapter on ICT applications, and the topic for today is banking applications. Now, I think this is one of the more important topics for young adults like yourselves to watch and learn, including adults as well. And the main reason being, most of you or some of you may already have some kind of a bank account. If you don't, you're definitely going to have a bank account at some point later on in your life. And it's important that you understand the different banking applications which are available, what the advantages are, the disadvantages, and also how these applications work. It's really important to understand how things work, so that way you're able to protect yourselves also from possible scams. And this is why I say this is a good tutorial for adults as well. Most adults, they use the applications, but they don't really know how they work. Now, this is a big-ish chapter. So again, in the description of this video, you can find links to the different things that I'm going to be discussing in this video, so you can jump to a topic of interest straight away. You'll be able to also find the material which I'm using for this presentation as a downloadable link in the description as well. But if you're here for the long haul to watch the entire tutorial so you can learn everything about banking applications, grab yourself a coffee and let's get started. Okay, let's have a look first at banking applications definition and uses. So first of all, what is it? Well, it says here, electronic systems for financial transactions like ATMs, online banking, and card payments. These, I would say, are the three main categories. ATMs is the automatic teller machine, and we're going to look at all of these in more detail. That's where you go to the cash point machine at the bank, you put your card in, and then you can do different transactions. You can withdraw cash, you can deposit, you can check your balance, so on and so forth. Online banking, that's when you can access your bank account from the internet and using any device or a device which has access to the internet. And then we have card payments. This is the process where we can purchase items or either transfer money from our credit cards or debit cards using applications. It then says banking applications provide customers with access to their accounts, enabling transactions like deposits, withdrawals, fund transfers, and more. They provide convenience and accessibility, managing finances from anywhere at any time. I think that's self-explanatory. Essentially, it's saying that you can withdraw money, in other words, get cash from a cash point machine. You're able to transfer money from one account to another account. Let's say you want to send money to somebody, and a whole lot more, which we're going to have a look at some of these in a short while. Things like checking the balance of your account, depositing money or a check, so on and so forth. The important thing is it's accessible from nearly any kind of device which is connected to the internet. You've got access to your account and you can carry out these, let's say, services at any point in time, 24 hours a day. So examples that we're going to be looking at are the ATM cash withdrawals and deposits. I should put there and other as well, because from an ATM, the automatic teller machine, there's lots of different kinds of transactions or services that you can do. We're going to look at online bill payments. So things like paying your electricity bill, your phone bill, gas bill if you have a gas bill, water bills and other bills. We can pay these now online. And why are these under banking applications? Because you're going to pay from your money, which is stored or kept by your bank. And you can do this online. Credit, debit card transactions. We're going to see the differences between what a debit card is and what a credit card is, what the advantages and disadvantages are. We've then got electronic funds transfer. That's the first thing we're going to be talking about. What is EFT and EFTPOS? Mobile banking apps. That's where we can access our bank accounts and services which our bank offers through mobile devices like a smartphone. Contactless payments. That's where we can pay for purchases that we're going to make using our debit or credit card. And we can just tap our card on the EFT POS machine. As I said, we're going to explain that in a second. Standing order and direct debit. You should know what the differences are between standing order and direct debit, which are services which you can set up on your bank account. Okay, this slide here essentially captures everything that we're going to talk about today in one slide. So I do like making these slides. I don't want to have a different slide for each one because then there really are too many slides, but having one slide as, let's say, a revision guide is just so much easier. So the first and most important thing to understand is what we mean by EFT and EFTPOS. And that's this section here. And we can see that everything else that we're going to be doing is related to EFT and EFTPOS. You can see all the arrows come from here. Okay, so first of all, what does EFT stand for? Electronic Funds Transfer. This is when we're transferring money from our bank account or our debit or credit card, which again is our account, to somebody else's account. And we do that electronically. Now, if you think of the old times when we used to give cash, that is not electronic funds transfer. That was a cash transfer because you were exchanging the currency itself. You weren't just exchanging the electronic version of the currency. So electronic funds transfer, EFT, basically captures everything that we're going to be doing. It is how we can transfer currency from one account to another account, whether it's for the purpose of purchasing items at the shop, paying for an electronic bill, sending money to a friend or to a child, whether we're sending money for services. All of these things mean that we are transferring funds being money, electronically to another account, the shop account, your child's account, whatever account it's going to be. Now, the next one down here is where some people get confused is the EFT POS. Now, POS stands for point of sale. Think about when you go to the grocery store or you go to a shop and you go and collect your items, you put them in the basket, they don't belong to you yet. They still belong to the shop. When you go to check out at the checkout till, the person who works at the shop will then scan the items and say, okay, your items are 153 euros and 27 cents. Now, at that point is where you will exchange goods for money. You're saying, okay, I want these items and I'm willing to give you currency so that I can take these items. Now, if I'm going to pay cash for these items, that's not an EFT POS. That is a POS, the point of sale. The point in the shop and at the time where I give cash to take your goods. Now, if I'm not going to use cash and I'm going to transfer money to the shopkeeper's account electronically, then that is what is known as an EFT, electronic funds transfer, point of sale. And the way I could transfer money to their account could be one of multiple ways. One way is this thing here. And we're going to look at this in more detail, but this is known as an EFT POS system. So they would ring up the amount, 153 euros, whatever cents, and you can either tap your card to pay by contactless credit card. You can tap your phone if you've got your mobile banking on there. You can insert the card in this system, or you may scan a QR code with your mobile device to make the payment. Either way that you use, you're still transferring money from your account to the shopkeeper's account electronically and for the purpose of purchasing goods. So that's EFT POS. Okay, so you should now understand what we mean by EFT, POS, and EFT POS. Everything comes under EFT. Our chapter comes under the electronic funds transfer. And the first unit, let's say, that we're going to be looking at is this one here, the ATM, the automatic teller machine. Some people call it the cash point machine because the majority of times we go to the ATM so that we can withdraw cash. Okay. Very rarely do we go for other purposes, but there are other things that you can do at an ATM. Not very common anymore because really anything you can do apart from withdrawing cash, you can do from your mobile phone, so you don't have to go to the ATM. So let's talk about the ATM. One thing that we can do is, as we said, withdraw cash. And this is probably the biggest advantage of an ATM over all the other applications, banking applications that we have. The ATM allows you to actually get physical cash. Another thing we can do is we can check our statement to see how much money we still have in our bank account. So, or we may just want to check, let's say we ask for somebody to deposit money into our account. We want to check if that money has been deposited. Then we can go and check our statement. We can deposit a check or cash. So you can actually deposit money into your account in the form of a check or cash. With cash, what you would normally do, you would go to the deposit section in the menu, and I'll talk about the menu in a second, and you would insert the cash in an envelope. You will fill out some kind of a form. You will enter the envelope. You got a flap that opens and you could enter the envelope in. You type in how much money you're depositing. Obviously, it's going to be cross-checked. You can't put €5 in there, say you're depositing 50,000 euros and you get 50,000. They're going to cross-check that. And you could also scan a check if you like. So if you're going to deposit a check that somebody has given you, you will say you're going to be you're depositing a check. It will allow you to insert the check and it will scan it and give you a receipt, and it will show you a copy of the check that you've deposited as reference. And afterwards, when the settlement happens, they will go and communicate with the other bank, give them the check and say, right, from this account, we want so much money because we've received a check from your customer. And then you've got some other simple bank transactions. You can transfer money from one of your accounts to another account. And depending on the cash point machine in the bank, you may have some other services. So what kind of questions would you get on something like this? Well, one of it will be, what kind of transactions or what kind of services can you get from a cash point machine? What are the advantages and the disadvantages? How does it work? Well, let's talk firstly about how it works. The first thing you're going to do is you're going to insert your card, just like in the picture here is. And this card here is going to be your credit or debit card. And you're going to insert that into the machine. It's going to then ask you to insert your PIN number, your personal identification number. If the PIN number is correct, then it will allow you access to services. Now, before it gets to the PIN number, it does actually do a check. When you insert your card, it will automatically check the card, make sure it's a valid card, make sure the card hasn't been stolen. If it's not valid, it's damaged, or it has been reported stolen, then the card will be sucked in. And that's it. You can't get your card back. You have to wait until the bank opens and go to the bank and say, for some reason, my card was not returned to me, and then they will investigate. Now, if those checks are all good, then it will ask you for your PIN number. You enter your PIN number. If your PIN number is correct, then it will open up the services. If you enter your PIN number in wrong 3 times, most banks, I think it's 3 times, then it will suck the card in and you can't get your card back. So if you are making a mistake and you're entering your PIN number wrong 2 times, don't try a 3rd time, because then you're going to have to go back to the bank when it's open. So let's say all these checks have been done. And the next step will be you put your PIN number, it's authenticated, it's allowed you in. You normally are faced with a language menu, so you can choose your preferred language. You select your preferred language, and then you're given a menu, and it will say, well, what would you like? What services do you want? Do you want to withdraw cash? Do you want to deposit cash? Do you want to check a statement of one of your accounts? And you would choose whatever it is that you want to do. Now, from there, once you have selected, if you're going to withdraw cash, you're going to say how much cash you want to withdraw. You will follow the instructions, press OK, and it will withdraw the cash from your account. It will first check to see that you've got that amount. So if you've only got 500 euros in there and you want 10,000, it's not going to give it to you. And usually there is a limit as to how much you can withdraw within a day. And this is like a protection. If somebody steals your card and they know the PIN number, they can't go and clean your account out. Some banks have got a limit of around about 300 euros, 400 euros, or 200 euros. So you will put how much you want to withdraw, and if the funds are available, it will give you the cash. And then print a receipt. It will ask you, is there anything else that you would like? If you say no, it will eject your card and you can go on your way. If you just want to check your balance, then you will just say check your balance. It will ask you, It will show you what your balance is, and it will ask you whether you want a printed copy of your balance. If you click yes, it will print a copy for you. And if you want to deposit cash or checks, then you will say you want to deposit money. It will ask you whether it's cash or check. You will follow the instructions. For example, put the cash in an envelope, deposit it, or you're going to enter the cash through the slider that it gives you. And if it's a check, it's going to ask you to insert the check. It will scan it to make sure it's okay. It will give you a printed copy. You verify which account you want to deposit the money into, and then it will print a copy of that check for you for your reference. And when you finish, it will eject the card. Now, those are the different services, or in rough, the different services that you can have with an ATM. What are the advantages? Well, one of the biggest advantages of an ATM is you can withdraw cash. Okay, the disadvantage is you have to go to the bank. It is accessible 24 hours a day unless there's something wrong with it. So you can go when the bank is closed. You can do basic transactions. You can't do all of the services that bank offers. For example, you can't start a new loan. You can't do that. You don't have that ability. You can do some of the general transactions and services that the bank gives you. It is open 24/7. The other disadvantage is if you're withdrawing cash, then there is a bit of a security issue of actually being robbed. So if people know that you're going to a cash point machine and they're just waiting for people to turn up at the cash point machine, they know that 90% of people that are going to go to the cash point machine or the ATM is to withdraw cash. And cash is great because it's not traceable. So once you've taken your cash, be careful if there are other people around. Don't withdraw cash in that case because you may get robbed. People tend to do what we call shoulder surfing, and while you're typing in your PIN number, they'll be looking over to have a look and see what your PIN number is. And also there are scams where they would put fake readers on top of the actual reader here. And as you insert your card, the fake reader from a scammer will actually read the detail from your card. And when you put your PIN number, it will also know the PIN number that you're inserting. And then they can duplicate or clone your card. So not the safest, but the biggest advantage is cash. You get hard cold cash when you're using an ATM. Here we have electronic bill payment. What is a bill? Things like your telephone bill, your electric bill, your water bill, your gas bill, bills that you have to pay for usually at the end of every month for services that you get from some kind of company offering a service. For example, your telephone, your electricity, your water, so on and so forth. And you have to pay for depending on how much electricity, let's say, you use, your bill will be different each month or each quarter. Now then, how do we pay for these bills? Well, in the past, we had to go to each company separately. We had to go to the telephone company to pay our telephone bills. We had to go to the electricity company to pay the electricity bills, so on and so forth. Now, however, we use what we call electronic bill payment. And there's usually two methods of doing this. The one method is you can log into your banking application either from your mobile device or from an internet browser using your computer or laptop. Sign into your e-banking or your banking account using your username, password, and any other tokens that you might use for 2FA. From there, you would choose the service, pay bills, find the bill that you want to pay, for example, your electricity bill, and then you will put your account number. You will put the amount that you want to pay. It will check it. In fact, when you actually put things like amounts, you can see on these bills, you get these little numbers next to them. So can you see here? It says here like the total payment here is 0.31 cents, and it's got this number 5 in square brackets. That's actually a check number. So if I accidentally type 0.32 to pay, and I put 5, it's going to say there's something wrong because that check number doesn't match with that amount. And the same with your account number here. It's got the number 5 at the end of the account number. If you type the account number in wrong and you put the correct check bit or you put the check bit wrong, then it's going to say you've typed something wrong. So you do get these little square brackets with numbers inside, and these are check bits. And usually these are added on the items that you need to enter. So you will add your account number, the amount that you want to pay. Then you will proceed to pay. You would choose which account you want to pay for and you pay. Now, the other way is you would go to, let's say, the company's website. So let's say you want to pay for your electricity bill. You're going to go to the electricity company's website. You're going to say bill payments. You will put, again, your account number and the check bit that it's got there. You will put the amount, maybe some other details it wants. It will find your bill and say, yep, this is the amount that you need to pay. And then you are given payment options. And the payment options will be, for example, using your debit or your credit card. Remember, yet now you're going from the company's website, not your banking website, your bank's website. You would then enter your credit card or debit card details, and then the electronic funds transfer will happen from the account of your credit or debit card. Now, the other way that you can pay for bills is the automated method, and that's called direct debit. Now, you've also got what we call standing order. You need to know the difference between these two. Now, direct debit, you can set up to pay for bills, and that's when you authorize your bank to say, right, from the account CETA here, which is the telephone company of this bill here, you can see it's called CETA. Whenever CETA wants bills to be paid, I'm authorizing you to pay the amount that they ask for. So at the end of the month, my bill will be charged from CETA to my bank account automatically, and the bank has already got a direct debit order from me to say I've authorized payments to be made. Okay, so let's say the 1 month my bill is 20 euros. 20 euros will be paid automatically at the end of the month when my telephone company requests for it. The next month it might be 33 euros. It will pay that automatically, and my bank has got the authorization and will pay directly. That saves me the trouble of having to remember to pay my bill at the end of the month because you might forget and your services are stopped. The disadvantage of that is, though, you've got less control of your account. It might be that you're running a little bit tight on money and you don't want to pay your bills straight away when they ask for them. So they may be asking for payment on the 20th of the month. You're going to be paid on the 28th of the month. And if they get paid on the 20th, then you might be left with no money until the 28th. Whereas you might say, well, I don't want it to be paid automatically. I'm going to wait until the 28th of the month when I'm paid, and then I'm going to pay for it. Okay, so you've got less control over, let's say, your management of your money, because you may think you've got more money and you forget that you've got direct debit set up, and they're going to pay your electric bill, your telephone bill, your water bill, and all these other bills, leaving you with no money at the end of the day. The other thing is, if you are running short of money and there's not enough money in there to pay the direct debit, then your services could be stopped and you won't realize why. So, what is a standing order? Standing order is when you set up an order with the bank to pay a company a fixed amount of money every month. So it's not like a bill where the amount of money they're going to pay changes every month depending on your usage. Let's say your rent, you're going to be paying rent to a letting agency, and your rent is, say, 450 euros a month. Every month you need to pay 450 euros. Now, instead of you having to remember every month to go and pay 450 euros, and if the one time you forget, the next month you have to pay 900 euros, you set up what we call a standing order with the bank. And that's where you instruct the bank to pay 450 euros from your account every month on the 25th of the month to the account of the letting agency. So every month that money will be taken from your account and go to the letting agency. So that's the difference between a standing order and a direct debit. Direct debit is authorized. You're authorizing the bank to pay for your bills, which could be a different amount each month. You would have to set up a different direct debit for each service. So a different one for your telephone company, a different one for the water bills, a different one for the electricity bills. A standing order is when you're going to set up an instruction with the bank to say, I want to pay this amount of money every month to this account number. And yes, all of this can be set up automatically, usually from, not automatically, but from e-banking services, from you logging into your e-banking service on the internet and setting it up. Personally, for things like this, to make sure I get it done right, I'd rather go to the bank and talk to a person and make sure that what I've done is correct. Okay, so that's electronic bill payment, understanding online banking payment by going to your bank's website or going to the company's website and paying by debit card or credit card. And that also we've covered the difference between direct debit and standing order. What's next on the list? Okay, we're going to look at now smartphone banking. And as the name says, smartphone banking essentially means the use of your smartphone to carry out various banking activities. It could be a smartphone, it could be a smart device like a smartwatch or something else. Essentially, these work with applications that we install on our device. For example, let's take online banking. Your bank can issue, or you can download your bank's online banking application. That will require you to register so that you can authenticate yourself. And that normally requires biometrics, either fingerprint, password, username, password, or face recognition, so that it authenticates you. And once you've got this set up, you've got access to your accounts. You can see your statements, you can see your balance, you can transfer money, and different activities that you're able to do, like pay bills, from the application that the bank gives you. And that's really useful because your smart device is usually with you all the time. You can carry out your banking activities anytime you want, from anywhere that you want, as long as you've got an internet connection, because it will require internet connection. Those are the advantages. It saves going to the bank. It saves money on travel expenses to travel to the bank to do these activities. However, there are some disadvantages in the sense that if you lose your phone, then and your phone is found, phones can get hacked, and if they can access your phone, bypass the password, they can access your banking activities. Not that common, but it is definitely possible. The other disadvantages would be if you don't have a stable connection, you're trying to do a transaction or something, you lose your internet connection for whatever reason, that could cause issues. Sometimes it could get confusing. Some people get a little bit confused about using the application properly, and because it involves money, it includes a little bit of stress when it comes to actually carrying out the activities you want to do. Then you've got debit, credit card payments, digital wallet, and tokenization. So debit and credit cards. First of all, you have to understand the difference between a debit and a credit card. A debit card essentially allows you to make payments and purchase items according to how much money you have in your account. So if you've got 300 euros in your account, you could only make payments up to 300 euros. A credit card, which you can apply for, will allow you to use the bank's money. So you may only have 300 euros in your account, but your credit card may give you credit up to 10,000 euros. You don't actually have that 10,000 euros, but you can make payments up to 10,000 euros, and you owe the money to the bank. Now, if you're late with your payments, the disadvantages are going to be that you're going to have to pay things like interest. So although you've borrowed 10,000, you may end up paying a lot more than 10,000 back because you haven't paid everything back in time. So credit essentially means you're not paying from your account, you're paying from the bank's money, and then you have to pay the bank back. Debit card means that you are paying from the money which you have available in your account. You can't spend more than that. The advantage of a credit card, essentially, it just allows you to make purchases for larger amounts if you don't have that money, and that just gives you the time to, when you do have the money or when you do get paid, so you can pay the bank back. Now, the way this works is you can actually scan and record your credit cards in what we call a digital wallet application. There are various brand names. We won't go into the brand names because you shouldn't be using them. But that essentially requires you registering your card, authenticating your card, and what happens is something called tokenization. And this is what happens for security in most scenarios when you're registering a card with a digital wallet. The application records the information of the card together with the actual device and the card that you're going to register. It creates a unique number. We'll call it a number. It's known as a token. And that token is unique only to your device. Let's say your smartphone. When you go to make a payment at a retail store, now I explain this again in the next chapter, which is about retail applications. But when you go to make a purchase and you scan your phone, you open your digital wallet, you select your credit card or debit card, and then you tap it on the EFTPOS. It does not send the card information. What it sends is only the unique token which has been generated unique for your device. That token is sent to the bank. The bank knows and can identify that token, that it belongs to you and to your particular debit or credit card, and then it will authorize the payment or not. Now, the advantage of this is that your bank details are not transferred to the shop or whoever it is that you're paying using the EFTPOS system. So your credit card details, your debit card details are not shared with anybody. The only thing that is shared is that token. Okay, so it's a very good. And if you're going to, let's say, use another device like your smartwatch as well to register the same card, well, it's not going to have the same token because now you're using a different device with the same card. And the new token for your smartwatch is unique only for your smartwatch. So you can register your card in, let's say, digital wallets on different devices. Okay, general banking, we've said this. General banking will be as far as using your bank accounts, your bank's application on your mobile phone, and you can carry out general banking services like transferring money, like we've got in that last point there, checking your statements, checking your balance, paying bills, and all the different general banking activities that you can do. And this is mobile banking, all the things that you can do. And we said the general advantages are it's accessible 24/7. You've always got your device with you. Normally your devices will use either Wi-Fi or they will use the mobile network, something like 3G or 4G network. So you don't need to have, let's say, Wi-Fi access to the internet. You can use telecommunication data, and you're able to carry out your banking services from wherever and whenever you want. The disadvantage is, again, the device could be lost, could be hacked. If it's lost and found, you have to have certain connectivity. It does require a slightly higher level of understanding of using the application and knowing what it is that you have to do to be comfortable in doing this. So that's smartphone banking. Okay, the last one that we're going to look at here is going to be debit credit card payments. Now, we've already said a little bit about using a digital wallet on a smartphone and registering your cards and making payments. Here, we're going to look at these particular categories here. So the first one, and one of the most common ones, is going to be contactless tap or NFC. And if you look at this credit card right here, can you see that little symbol here? Looks like the Wi-Fi symbol. If your credit or debit card has that symbol, it specifically means that this is a contactless card and you can use that card for contactless payment. Contactless essentially means that you can make payments without actually putting the card into the reader or the EFTPOS. Now, contactless uses NFC or near field communication. And the way it works is very similar to RFID. So if you've read about radio frequency identification, NFC, it works with the same principle. When you place the card close to the reader, maximum distance, I think about 5 centimeters, that's the maximum distance you can have it from there. There's like a radio frequency which is transmitted from the reader, and that energizes the card, because it's got a little antenna embedded in the card, which energizes the chip on the card, and then the card will be able to start sending data about the card itself so that a transaction can be made. Okay, so that's contactless NFC. And when we actually register our cards, like we said over here, in a digital wallet, when we use a digital wallet, then your card, your device, will create a unique token, which is your device and that card. And it's only the token which is sent. But when you're making payments with your card, it's actually giving the card information to the retailer so that the payment can be made. So essentially, if you're using a digital wallet, it can be more secure because the digital wallet does not send the card information. It only sends that token. Whereas a card, it will send the card information. Now, one of the advantages of using NFC or tap over what we call chip and pin, which is the second one, is essentially it's faster. You don't have to put the pin. You don't have somebody, or the risk of somebody looking over your shoulder and seeing what your PIN number is. And it's just a faster process, and less queues are made. If you're looking at the chip and PIN method, well, that's where you have to actually insert the card into the reader. Now, even if your card is contactless, if you try to make a payment for a large amount of money, and this depends on the bank, let's say something over 50 euros, then it will not allow that payment to be made through NFC or contactless. You have to actually insert the card. Now, this is not always the case. It depends on what restrictions the bank has on your card. But if you do try to make a large purchase, in most cases, you have to insert the card and put the PIN number as an extra verification. Now, these cards have got what we call they're smart cards. They've got this chip, and that's why it's called a chip and PIN. That little gold contact, there's a little microchip there, and it holds encrypted information. When you place the card inside the reader, it cannot read any of the data because it's encrypted. When you put your PIN and the PIN is correct, together with that PIN number, the data on the chip is decrypted, and it can read the information so that the transaction can then be sent to your bank. The bank can authorize the payment, and then the message is sent back to authorize it, and you can purchase your items. So chip and PIN is more secure than using NFC because you've got the PIN there as well. It does take a bit longer, and you can have sometimes, people looking over your shoulder to see what your PIN number is. And if they see your PIN number and then they steal your card, then they've got access to make full payments on your card. Whereas with NFC, the payment can be, how would you say, up to a certain limit. And the reason they put these limits is because you can have people walking, let's say, on underground tubes or busy buses and this, that, the other. Then they've got an EFTP chip and PIN reader like this with NFC. And if your card is in close range or close proximity, they can be charging your card without you knowing it. And just having that limit blocks them from being able to make large payments. So a good way to protect your NFC card is to put some aluminium foil in your wallet and place your card between the aluminium foil. The foil will block the RFID signals. You can actually buy wallets and mobile phone cases which have RFID blockers or NFC blockers, so they can't place an NFC reader close to your card and withdraw money. When you do actually make a payment using your credit or debit card, the amount is not directly transferred from your account to the other account immediately. That doesn't happen. What happens when you make the payment, we're going to see this when we look at the retail applications, but when you actually make a payment at a shop for, let's say you got 300 euros and you're purchasing something for 100 euros, it's actually going to send the information once you've authenticated the card. The bank will say, yes, there are enough funds for this transaction, please proceed. And you will then get your receipt and buy your items. But the bank does not transfer the 100 euros yet. That doesn't happen immediately. It simply blocks 100 euros from your account. So if you have 300 euros in there, you've only got access to 200 euros now, because the 100 euros are blocked for that payment that you have made. And then later on, within 1 or 2 business days, when the company or the shop or the retail does the settlement, the transaction is actually made. And I'm saying this because when we're looking at QR code payments, let's say you want somebody wants you to give them money, or you want to give somebody some money. Then you can open your banking application. The other person can open their banking application, open a QR code on their device, you scan it on your device, and then you can send the amount to them directly because the QR code holds the information for their bank account. Now, when you do a payment like this with QR code, generally the payment is transferred immediately. So when you're sending money, that's like going to your banking application on your smart device and sending money to somebody. The money leaves your account and goes to the other person immediately. So you can make payments with QR codes, and you can open your banking application. So let's say you want to purchase something. There's a QR code there. You will open your banking application, click on the payment, choose the QR code. That will open the camera on your device. You can scan the QR code, and that will tell you that it's accepted it, and then you will put the amount that you want to pay, press pay, and it will send that amount of money to the bank account, which is represented by that QR code. And usually the money in these cases, when you do make a payment like that, the money leaves your account immediately. Okay, the older method, which is the swipe, and that's where you've got a magnetic strip on the back of the card, of your credit card. And instead of reading the chip and pin, it actually reads the information on the back on the magnetic strip, that black strip on the back of a card. Those are they're not used as much anymore, mainly because the data is directly accessible, because it's on the magnetic strip. Whereas with the chip and pin, the data is not acceptable or readable unless you've got an actual reader and you put the pin. The magnetic strip is not used that much anymore, although it is still included on the back of credit cards in most cases as a backup. It's not as secure, as we said, because the data is actually on the card, and there is what they call skimming. This is something that they used to do they probably still do now. What if you go to a restaurant or bar or somewhere, you're going to go pay and you give your credit card to the server, then they take your credit card to go make the payment or come back. What they will do, they have a little handheld device and they will skim the card. They will read the magnetic strip, and their little skimmer device will record that data and store it. And then they will send that data to a hacker who will then they will duplicate your card and payments will be able to be made. So swipe, the older method with the magnetic strip, not as secure, also slower, less secure. Online payments, entering card details. So you could make a debit or a credit card payment using an online payment by entering the credit card details and making the payment that way. And then, of course, at the bottom, we've got smartphone wallets. There's no need for a physical card. And that's where we discuss with tokenization, the method. These are actually more secure because it doesn't send your credit card information to the person that you're paying. It only sends a token, and it's that token that is communicated with your bank, and then the bank will approve or deny this transaction. So again, you can't lose your actual physical card. It's a more secure method of payment. You need to use something like biometrics, face recognition, or a fingerprint to actually open the wallet. And that when you use your biometric authentication method, then you've got access to the wallet and all the cards that you've got registered in that wallet. So it's not just one card. You could have 4, 5, 6, or as many cards as you want. You swipe across, find the card you want to make the payment with, and tap. And when you do that, it sends the token for your device with that card. Okay, I think that's everything that we've covered when it comes to EFT. Remember, EFT is electronic funds transfer, and EFT POS is electronic funds transfer point of sale. So that's only when we're going to make a sale. Everything comes under EFT, electronic funds transfer, everything that we've talked about today. Okay, so the next slide I've got here for you is the general use for these payment methods or these banking applications that we've talked about. So the general use at an ATM is as follows. You insert or tap your card, you choose the language, enter the PIN, select transaction type, i.e. withdraw or balance inquiry, enter the amount or required details. For example, if you want a balance inquiry or you want a statement, you're going to put the dates that you want the statement for. If you're going to withdraw cash, put how much you want to withdraw. Confirm the transaction, collect your cash, and choose if you want a receipt. Remove your card. Now, these are the general steps. It's not the entire process, but these will get you the full marks if you're asked about somebody wants to use the ATM to check their balance, or they want to withdraw cash. What are the steps? That'll probably be a 4 or 5 or 6 mark question. You've got these 7 marks here. You're guaranteed to get your marks. General mobile banking use. So this will be using a mobile device. So here you would open the banking application on your mobile device. You're going to log in securely using a username, a password, a PIN, or a biometric login like fingerprint or face recognition. Select the type of transaction like transfer, payment, balance inquiry. You can't do cash withdrawal. That's not possible because it's electronic funds here. Enter the required details, how much you want to transfer or send, the account number, the payee that you're going to pay. Confirm and authorize the transaction. And lastly, you're going to receive confirmation that it's been completed, and you can optionally choose to take a screenshot or print, or let's say create a copy of the receipt for you to keep as PDF form. General debit credit card payment. So if you're going to make a payment with a debit or credit card, it's going to involve you presenting your card, insert, swipe or tap, depending on the method you're going to use at the terminal. Enter PIN if required or if large amount. So again, we've said even if you're using NFC, for example, a tap method, then and you're going to make a very large payment, then sometimes it may ask you to insert the card and enter the PIN as extra security. Select or confirm transaction type and amount. Finally, you're going to go to wait for the bank to authorize the payment, collect the receipt and remove your card. So those are the 5 general steps. Of course, you're going to customize these a little bit depending on the scenario they give you. Online banking, very similar to mobile banking. You're going to open your banking application or online banking website. So this is where you would say that you can use a browser, a computer. You don't have to use an application on a smart device. Log in securely with the username, password, PIN or biometric login. Choose a language if the option is available. Select to pay bills or payments and choose the payee. Enter the payment details, amount, account, reference number, confirm and authorize the payment. Receive confirmation and optionally save or screenshot the receipt. So these are just some general guides on how you would carry out an action using these different methods. And you can see they're all pretty similar. You're going to start off by presenting something or logging into something. You're going to authenticate, and then it's going to do the transaction. It's going to communicate with the bank, and you've always got the option to either save a receipt or print or something like that. The next step here is going to be the general advantages and disadvantages for banking applications. Again, for each one of these tutorials, I give you these general advantages and disadvantages. So let's have a look at them. Advantages of banking applications in general: convenient access anytime, anywhere, 24/7 customer service or alerts. Whether it's ATM or whether you're using an application on your phone or a browser on your computer, you've got access to banking services 24/7. And you've also got alerts. Let's say you've made a payment. You're going to usually be alerted on your smart device that the payment has been made 24/7. Faster transaction processing. The process of the transaction is a lot quicker because you're using EFT. The authorization from the bank is done immediately. The funds may not be transferred immediately. They may be blocked from your account, but the purchase and authorization goes through, so you can get your goods a lot faster. Reduced need for physical branches. Okay, so again, you'd need less bank or branches for you to carry out banking activities, because you could do nearly everything you want on smart devices, so there's less need for branches. Better record keeping, e.g. transaction history. Now, here we're looking at the advantages for, let's say, a retailer. If they're selling goods, when you make a payment using EFT, using the banking applications of electronic funds transfer, they get their money immediately. But at the same time, their accounts software is automatically updated live. It's much faster for them and more accurate for them rather than cash, where they have to wait until the end of the day to see what sales they've made, how much cash they've received, and make sure that the total of the sales and the cash they've got balances out. This is automatically done. So record keeping, transaction history is much faster for the retailers. Enhanced security features, so you can have personal identification numbers, passwords, biometrics, etc. Makes transactions a lot more secure, and allows for online shopping, e-commerce. So you are able, using EFT, to make transactions and purchase goods online safely and securely. Obviously, there are disadvantages. We're going to have a look at those in a second. But because you're transferring funds electronically and not with cash, you can shop online and shop from anywhere in the world with all the advantages that comes with that. And of course, the disadvantages. We'll see those when we're going to look at retail applications. Disadvantages: security risks, fraud, phishing, or hacking. Whenever you're working or doing anything electronically over the internet, over a network, sending information, there's going to be a security risk because that transaction can be interrupted and they could try to, let's say, decrypt the information and hack your account. Requires access to technology and the internet. All of these applications, or EFT, electronic funds transfer, require access to an internet connection or a network connection so that the communication between the two devices can happen. And that means you're relying upon that. You need the appropriate technology to be able to carry these things out, like EFTPOS systems, chip and pin readers, NFCs, a card or a debit card with NFC enabled, or a smart device. It requires technology. When you have technology and internet requirements, then you've got some extra costs and a little bit of extra complexity there. Complexity for some users, difficult to navigate or understand. These things can get ridiculously difficult, especially when it comes to security. With so much fraud out there, banks are having to increase the security levels and increase the levels of security. So it's not just a fingerprint anymore. It's not just a password that you're going to enter in your banking application. If you want to transfer a large amount of money, you may have a separate device where it will create a 2FA. You have to have that separate, apart from your phone, not your phone device anymore. You may have another device where you have to put your credit card in. It will also, you put your PIN number in the credit in that device, and then it will generate a token. So you have to have that token generator and your credit card so that you can authenticate that it's you. So this makes the whole process a lot more complicated, making it harder for the older generation, but also for younger generations which are not used to these kind of security protocols. Loss of personal interaction with the bank staff. Yes, everything becomes impersonal. When things become impersonal, it becomes higher anxiety. You don't have someone to ask, is this correct? Have I done this right? You don't have someone to suggest something to you, say, well, if you do it this way, it will be easier. If you do it this way, you save money. You're going off whatever you know how to use on that banking application. And sometimes that can get really, really confusing. Technical failures or system outages can block access. Well, yeah, if you're trying to do a transaction or you've logged into your account, you've authenticated yourself and you lose connection, and then you authenticate yourself again and then you lose connection again because the connection is weak, it could lock you out of the system because it may see it as multiple attempts of trying to log in, and it could lock your account. So this could be an issue. So you need to make sure before you do anything, you've got a good, stable internet connection with the device that you're using. Potential for user errors when entering details. Yep, I get concerned when I'm going to enter, let's say, an IBAN number, which is a massive international bank account number. And there are so many digits, and you need to double check it, triple check it, quadruple check it to make sure it's correct. Otherwise, either your transaction won't work or you may send the wrong amount or to the wrong account. Some banking services still require in-person visits. So there are some banking services which you can't do using a bank application or the bank website. You may want to, let's say, request for a loan. Some banks may give you that opportunity to do this online. But if you want, let's say, a business loan, a large loan or something, you need to go to the bank. You may want to set up some kind of payment plan if you've run yourself into debt by overusing your debit card, or sorry, your credit card. And you want to try and find a solution how to minimize the effect or try to set up a payment plan. You need to go into the bank and talk to someone and arrange a plan with them. So some services are not, let's say, possible from electronic means like a bank application or their website. Okay, those are the general banking application advantages and disadvantages. Okay, let's start having a look at some past exam paper questions and some questions which I have created for you as well. As always, these questions are designed, especially the ones that I create, they're designed not only to learn to answer the questions, but also to understand the topic. So our first question, this is an exam-based question, a past paper question. It says people can manage their banking transactions using the internet. However, if the internet signal is poor, telephone banking can be used. A person wishes to use telephone banking without speaking to an operator to transfer money from one bank account to another. Describe the steps needed to do this. Now, this is more like a general knowledge question. If you just think about the process required that you would want to send money from your bank account to somebody else, the only difference is you're not going to be talking to somebody. You're going to be using only the dial pad on your phone because it says without speaking to an operator. So if we just think about that, the first thing that you would do without even looking at the mark scheme, which is down here, it's got like 18 steps identified. You only want 6 marks. And the general marks are going to be the common sense ones. These are ones that you can remember, not even remember, if you just think about it. So the first thing will be you're going to use your telephone to dial the bank number. Then you're going to be faced probably with some options. What is it that you would like to do? You will say, for example, I want to transfer money. The next step, you're going to have to authenticate yourself. Now, you've only got your telephone. You're not talking to a person. So you would have to identify yourself by putting your username, your password, and let's say your account number. And you're going to have to dial these in using the keypad on your phone, or you're going to have to use your voice to speak and say what it is that you want to say. For example, my account number is 221345. It will then repeat that back to you and you will confirm whether it's understood correctly. Even when you're dialing it in on the dial pad on the phone, then it will repeat it back to you and you will confirm that it is correct. Then you would put your password, usually not your whole password though. Never do they ask for the entire password. They would ask for something like the 2nd, the 4th, and the 9th character of your password. And that way, not even the bank knows what your password is, or the bank operators. Once you've done that, you're going to select the account that you want to send money from. Once you've done that, you're then going to give the information of the bank account that you want to send the money to. And again, you're going to key in the account number. You're going to say the name of the person, for example. It's going to then ask you how much money do you want to send. It's going to say, read it back to you. You want to send so much money. You're going to send it to this account. Please confirm. Once you've confirmed, it will then tell you that that it has been completed, and then you can probably hang up. That's more than 6 marks. But down here, you've got the whole system, the whole like 18 things, like all the different steps. As long as you show you have a good understanding of the flow and the order to do this, it's not really that hard. Don't get technical. Be logical. Okay, and I'm not going to read all these 18 steps out. I'm just going to get myself out of the way here. So let me just remove me from here so you can see all of that. And that essentially is what's included in the mark scheme. So essentially you want 6 from there. High street banks now offer customers access to internet banking when they are in the physical bank. So this means that they've got internet banking services inside the bank. Discuss the advantages and disadvantages to the bank of using internet banking this way. Now that to the bank. So we want the advantage and disadvantage to the bank, not to the actual customers. Okay, well, first of all, you're going to have banks can stay open longer, because you can have just one person in there just helping people with internet banking when the tellers are closed. You can have more bank staff are available to help customers. So when the bank is actually open, you may have, let's say, 3 tellers supporting or giving service to 3 customers at a time, but you may have other 6 internet banking stations, which are serving another 6 clients there. So you're actually serving 9 with only 3 members of staff. And that also means that you can have less staff in the bank, which is more profitable to the bank. There's less chance of hacking, fraud as the system used in the banks. So since the system is being used in the banks, you're using the bank systems, the bank's internet connection, then you're obviously going to be behind the bank's firewalls and internet protection services with a very strong IT department, making sure that their network is secure and their internet banking is also secure. yeah, it's going to be way more secure. Fewer bank tellers, so more profitable for the bank. Oh, we said that already, because you're going to have a lot more people being served as well through using the internet banking service. You need less tellers, so it's more profitable. The disadvantages are going to be things like the initial cost of the hardware. Software is expensive. You also need to have a good technical team there as well to make sure the services are running properly. And also things like network security is also enabled and monitored. You need to retrain staff, which can be expensive. You're going to have to train some staff, either existing staff or new staff, how to use the internet banking software so they can offer support to the customers comfortably and reliably. System maintenance costs will be expensive as more inexperienced people are using the system. I don't know about that question. I am going to say system maintenance costs will be expensive because you're using high technology, you're using software engineering there, you've got different services that need to be maintained and supported and upgraded. I don't think that inexperienced people are going to be using the system is going to make a difference there. I'm sure that the people or the customers that are using the internet banking service, they can't do some kind of damage there. So I don't agree with that part where it says inexperienced people. I would get rid of that part. But this is what was in the mark scheme. Staff numbers may increase as staff are needed to help internet banking customers. So we can say that staff is going to be decreased, but you can see these two here actually kind of cancel each other out. But do they? It depends. If you justify your answer, remember, I'm the why guy. If you say why, then both of these points are valid. So fewer bank tellers are needed because you've got more people using internet banking, so you can have less tellers, but you may have an increase of staff in general because if you've got, let's say, 2-3 bank tellers helping people one-to-one, you may also need 2 or 3 extra people to help with customers with the internet banking. So as long as you explain the reasoning for your answer, both of these are valid points. Okay, and I choose these questions because these are questions which are out of the norm. The normal questions and answers we've already covered when I've been discussing all the EFT methods that we were looking at a little while ago. Okay, next question. This is a quite common one. Discuss the advantages and disadvantages to customers of using internet banking rather than visiting a bank. Now, I think this is a question that you've probably already discussed and done in the past. But anyway, I think it is a good one to make sure you have an understanding of this, because if a similar question does come up, you'll be able to answer it quite easily. So the advantages are going to be it reduces the number of journeys to and from the bank. At the same time, if you're doing less journeys, that's going to be more cost effective. Why? Because you're going to save money on travel expenses or fuel to get to the bank and leave the bank. Remember, you have to say the why. It's going to save time. So if you're saving time, you could be using that time for other things. For example, spending time with your family, going to the gym, being healthy, and all these other things which are going to be positives. Remember, these are advantages. It's easier to shop around for the better bank accounts. So you can, if you're going to do internet banking, you're looking for a bank. I don't really like that answer in the mark scheme because the advantage of using internet banking. So if you're using internet banking, you've already got a bank account. So you're not really going to be shopping around for another bank account, are you? Doesn't really make sense, guys. So I don't really like that answer, but it's there. 24 hours a day, you can be doing your banking and using the different bank services any time of the day from any location. Whether you're using a mobile device, you're using a station at home, a computer at home, you're able to do your banking. No physical robberies of customers. Now, that's a good one because if you think about internet banking compared, let's say you're going to make some payments to some people, you're going to transfer money from one account to another account. Instead of you going to the ATM or going to the actual bank, getting cash, and then taking that cash and traveling with that cash to pay somebody where you can be robbed, especially if you're using an ATM, because we've said when we're talking about ATMs, 90% of the times people go to an ATM to withdraw cash. So if somebody wants to rob somebody and get some cash, they're going to be hanging around an ATM because they know when they leave the ATM, they're going to have cash on them. So by using internet banking, There's no physical cash there. You're at home. It's much safer. Disadvantage, security is an issue. So again, whenever we're looking at internet, anything where you're going to sign in, authenticate yourself, then there's going to be an issue of safety, of security. And that means you have to be careful about what kind of networks that you're using. You have to have a device which is protected. It's got either firewalls or antivirus. Have good understanding of phishing attempts so you don't get phished. But there's always a risk of your accounts being hacked. The user needs a reliable internet connection. Again, anything that works through the internet, you need a reliable internet connection. And at the same time, you're at risk of technical failures. So the device that you're using may fail, may run out of battery or something like that. More risk of farming, phishing, and fraud. Well, we've already said that. Since you're using internet, you're probably using your personal devices where you've got access to your emails as well. You could get a phishing email. You click on a link and you just given access to somebody to your banking. Easier to make errors whilst using internet banking, e.g. Incorrect input. Again, I'm always anxious when I'm doing online banking using the internet, because you just want to double check that you've entered all the numbers correctly, the right account numbers and everything. It's easy to make a mistake. They do use, and we said when we talked about electronic bills, things like little numbers, which are like check numbers, to make sure the amount you've put is correct, because it has to match the check number. But that's not 100% secure. You could put the wrong number and it would match with that check number as well. If the internet connection drops during a transaction, then there may be issues. It could be that you have been charged, you don't know. It could be that the money from your account has been blocked if you're making some kind of payment, but the transaction hasn't gone through, and you have to wait until the bank opens up, until the settlements happen, and see that this transaction wasn't completed and the money goes back into your account. You need to make sure you've got good internet connection before you start working. Device needed for two-factor authentication. Now, I do feel that a lot of people get a little bit anxious with 2FA. You know, they say, send me a 2FA code to my mobile device, and they're sitting there looking at their device, waiting for this code to come up and say, it hasn't arrived, it hasn't arrived, it hasn't arrived. And sometimes they may miss it. Or you may have a separate device that will create a 2FA code. So it might not be on your mobile device. It might not be from your mobile banking application. You might have a different device from your bank that will actually generate that 2FA code. And you have to have that with you. And if you don't, you can't continue with that transaction. Physical money, cash, cannot be deposited or withdrawn using online banking. Again, this is the biggest disadvantage when it comes to online banking. You can't work with physical cash. Now, one other disadvantage was, you know, in many times when you're trying to do purchases, that some shops may not take credit cards. But now I think it's the opposite. Most people don't accept cash. They prefer electronic funds transfer, because the transfer of the money and the stock keeping is immediate. When it comes to internet banking, though, you can't withdraw cash. And that's the biggest disadvantage that you've got. Okay, this question here is one which I have put together. I've made it an 8-mark question, not so much for the question for you to learn the answer, but at the same time, I want this question and the answer to be a learning resource. So the question says here, explain the differences between debit cards and credit cards. Compare their advantages and disadvantages. So this answer here will explain everything you need to know about debit cards and credit cards, the advantages and disadvantages all in one. So it's not so much about the question. It's for you to understand how to structure a question and the answer, to structure your answer, but at the same time, learn about this topic. So it says here, debit card allows the user to pay for goods and services using money directly from their bank account. The money is deducted immediately. Okay, so when you're using a debit card and you make a payment, that money is deducted immediately, and the user must have sufficient funds available. Now, it says deducted immediately. It doesn't mean that the money leaves your account immediately. Generally, what would happen is that the amount is blocked. So if you've got 300 euros in there, you've paid 100 euros, you only now have access to 200 euros. It hasn't actually left and gone to the other person's account, but it has been removed from your access, that 100 euros. A credit card allows you to borrow money from the bank to make purchases. The user pays the bank back later and may be charged interest if the balance is not cleared on time. And remember, we discussed this when we talked about debit cards and credit cards. One advantage of a debit card is that it reduces the risk of debt because the user can only spend money they already have. However, a disadvantage is that large purchases cannot be made if there are insufficient funds. So that's the thing with debit cards. You can only spend what you've got. Think about it. You can only spend, if you've got 10 euros in your pocket, you can only spend what money you've got there. If you want to purchase something which is 100 euros and you've got a friend next to you who wants to lend you some money, then you're actually paying with their money. You're not paying with your money. So you have to pay them back. The only difference is the bank is going to charge you interest if you don't pay back in time. So by the end of the month, if you haven't cleared what you owed them, they will add something like 3% on top. So if you've borrowed 100 euros, then by the end of the month, you owe 103 euros, for example. However, a disadvantage is that large purchases cannot be made if there are insufficient funds. So if you're using a debit card, you could only purchase what according to how much money you've got. An advantage of a credit card is that it allows users to make purchases even if they do not currently have enough money, which can be useful in emergencies. And this is true. Having a credit card with, let's say, an X amount, say 10,000 credit, then it doesn't mean you have to use it. And if you're not using it, you're only paying a small amount a year to have the availability to have that 10,000. So you're still going to pay something. You can't just say, I've got 10,000 if I need it. I mean, you'll probably be paying something like about 50, 60 euros a year or something like that, so that you have that credit card. But it gives you that sense of security that if you're strapped for cash, you need an emergency, you've got 10,000 to use from the bank. Credit cards may also offer purchase protection. Okay, so if you're paying with a credit card, because it is the bank paying, not your money, it's not coming from your money, it's coming from the bank's money, then most times purchases made from credit card are protected. So let's say you got swindled and you bought a device and, I don't know, it was a fake or something like that, then you can contact the bank, and then the bank, you can try and reclaim your money back. Okay. And also, if your card is stolen and the money is used, then there is some kind of protection there as well. However, a major disadvantage is that interest charges can accumulate, leading to debt. So when we pay with credit cards and we don't actually take the money out of our pockets and pay by cash, we don't actually realize what we're actually spending. It doesn't feel like we're spending money. And if we are spending the bank's money instead of our money, and we don't pay back in time, then the interest will increase and increase and increase. And that's when you end up being in debt, that you owe more money than you can pay back. In comparison, debit cards are safer for budgeting. Okay, so a debit card is always easier to budget because you know how much you've got left. That's it. It's not, you don't owe anything. What you have purchased has come from your money. You don't owe anybody anything. And what you've got left is what you have left. While credit cards provide greater financial flexibility but carry higher financial risk. Higher risk because you can end up in debt. Here it says, explain how smartphones can be used to make electronic payments. Discuss the advantages and disadvantages of using smartphones for payments. Okay, as always, the question is designed not just as a sample exam question which I've put together, but as a question to help you learn about this particular topic. So here we're looking at smartphones being used for payments. It says here smartphones can be used to make electronic payments using digital wallets or payment applications. Payments are made by either scanning a QR code, tapping the phone on contactless terminal using NFC technology, or entering card details within the app. Now, this basically means if you, let's say you want to make a payment, you can use your bank's application. You can sign into it using some kind of biometric. You can choose the payment option and choose to scan a QR code. And you can, once it's scanned the QR code, you can put them out, make the payment. You can tap the phone using NFC, or you could just use an application where you enter your card details and the payment is made. So let's say you scan something, or you go somewhere, it says, well, enter your card details to make the payment. You put your card details and you can make your payment. The money is then transferred electronically from the customer's bank account or linked card to the retailer's account. One advantage of using smartphone for payments is convenience, as customers do not need to carry cash or cards and can pay quickly. So that's always going to be one of the advantages with the smartphone. I mean, think about all the things you do with your smartphones and you don't have to carry things around. It's a camera. You don't need to carry another camera around. You can have your digital wallet. You don't need to carry your credit cards or debit cards with you. You can make the payments from the applications. Another advantage is that transactions are often secure using encryption and biometric authentication, such as fingerprints or face recognition. However, a disadvantage is that smartphones can be lost, stolen, or hacked, which may allow unauthorized access to payment applications. Another disadvantage is that some small shops or locations may not accept mobile payments, resulting in the customer not being able to purchase. Now, this goes both ways. So we've discussed all of these already, but putting this as a question, it's easier to do like a recap on everything that we've done regarding smartphone payments. But there is this issue with, there are some small shops, especially if you travel abroad and you go to, let's say, remote locations or small shops and this, that, they don't actually accept payments, electronic payment systems. They want cash. But in general, in most areas now, cash is not acceptable. You want to pay with cash and they will say no cash, only credit cards or debit cards. So they prefer electronic payments. And the reason is, and you're going to see this when we look at the chapter on retail applications, when you make a payment with EFT, electronic funds transfer, the payment is transferred, it's locked, they're going to get it straight away. It's going to register in their account. The money might not go there, but it registers that they have received this amount. The amount hasn't gone in their account yet in most cases, but it will be. It also has automatic stock control. These items have been purchased and they have been paid for, and all of their finances are up to date in time, real life. So they actually prefer that rather than, balancing the cash at the end of the day with what's being sold. It gets a little bit tricky. So that just gives you an overall on the use of smartphones for payments. Okay, final question here that I've got for you. A customer goes to a shop to buy groceries and decides to pay using an EFTPOS, electronic funds transfer point of sale card. Explain how EFTPOS works in this situation and evaluate the advantages and disadvantages of using EFTPOS for both the customer and the shop. I should have highlighted that. I didn't, but this is important. For both the customer and the shop, very important. So you want the advantage and disadvantage of both. And I've made this an 8-mark question. And I've done this because this really encapsulates everything about electronic funds transfer point of sale and the advantages for the customer and the shop all in one question. So again, this is a question and answer to help you understand this topic. So here's my answer. When a customer pays for groceries using EFTPOS card, the card is inserted or tapped on the payment terminal. Now remember, the EFTPOS card is a card, a credit card or a debit card, because you're able to transfer funds electronically at the point of sale. In other words, at the point where you take goods and you give currency. That's the cashier, where you go and pay the cashier. The terminal communicates with the bank to check that there are enough funds and the funds are blocked from the customer's account. Confirmation is sent to the EFTPOS, in other words, the card reader, the NFC reader, whatever it is that you're using, the chip and pin, and a receipt is printed. The funds are transferred to the shop's account at a later stage during settlement. So when you actually use your credit card or debit card and you either tap it or chip and pin and you request to make a payment for goods, the information is your bank is contacted. Your bank will check to see if you have the amount, the correct amount or enough money in your account. It doesn't tell the retailer how much you have. It just says there are enough funds. There's enough money here to pay you. Then it blocks that amount from your account, sends the confirmation that the amount has been blocked, so the retailer will get their money and it will approve the purchase. It will then print that receipt for you. For the customer, advantages include convenience because no cash is needed, and security because the transaction is verified with a PIN or contactless authentication. A disadvantage is that if the card is lost or stolen, it could be misused. Another disadvantage is that the payment will fail if there are insufficient funds. For the shop, advantages include receiving money immediately and having accurate digital records of all transactions, which helps with accounting. And this is what we were saying. For the shop, as soon as you make a payment using a debit or a credit card using electronic funds transfer, then their accounts are updated immediately. Their stock is updated immediately. They don't have to wait till the end of the day or when they're going to do the balancing of the sales. And that also reduces administrative tasks as well. So you don't have someone having to do all of this. It's done automatically. A disadvantage is that banks may charge a transaction fee and payments depend on electronic systems, which may fail, like communication failure or hardware failure. Now, this is an important point. For the banks to be offering this system of electronic funds transfer using debit card and credit cards, they have to be making money somehow. Now, if you're purchasing something which is 100 euros, for example, and that's the cost of the item 100, you only pay 100 euros. So the bank isn't making any money off you. So where are they making the money from? Well, they're making it from the retailer. So, well, you at the end of the day, because they're going to add it on the price. But the retailer, if they get 100 euros from you, let's say 1.5 or 2% or 3% of that goes to the bank. So out of the 100 euros, let's say 3 euros goes to the bank. So the retailer only gets 97 euros. Okay. And that's why banks promote and want you to use debit and credit cards, because they're making money. Now, obviously, at the end of the day, you're the one paying because the retailer is not going to lose money. They're just going to up the price a little bit so that the bank charges are covered. Now, they also rely on technology and communication. So if a shop or retailer is using EFT, POS, then let's say there's an electrical shortage or a cutout, or let's say the internet goes down, communication with the bank, or let's say the device isn't working, the chip and pin reader or the NFC reader, they cannot make any sales. The only way they will be able to do sales is using cash. Okay, so they're largely reliable on the network connection and on the technology, and they can fail. Overall, EFT POS is fast, secure, and convenient for both customers and shops, but it has some risks. Oh, where am I? Such as a card misuse and system dependency. So, card misuse. If you lose your card, someone steals your card, they could misuse it. And also the shops have a system dependency on the technology and the devices for payments to be made. Okay, as I said, that's a big chapter, but there's a lot of information there. And as I said, I think this is one of the more important chapters because at some point, you guys, you're going to have a bank account. You've probably already used things like electronic funds transfers to make payments or to send money. You're going to have a bank account at some point. You're going to be using online banking. You're going to be paying bills. It's good to understand the different methods that you can use, the different methods that are available to you, but more importantly, how they work. And that way, you know what to use best for you, understand the security risks so that you're able to take precautions. Now, again, as always, everything that I've used for this presentation in PDF form, you can download from the description. You can find links to the other tutorials as well on this chapter of ICT applications in the description of this video. And as always, if you've liked what you've seen, you've learned something new, give us a like, make sure you subscribe. Take care. Bye-bye.